The Dow Jones Industrial Average plunged 995.82 points today.
Just a total bloodbath.
Yeah, literally nearly 1,000 points wiped out, closing at 51,751.50. That is a negative 1.89% drop. The S&P 500 fell 72.21 points, or 0.97%, down to 7,356.57.
Right.
And the Nasdaq Composite dropped 223.93 points, 0.90%, finishing at 24,652.98. Oh, and the 10-year Treasury yield ticked up slightly by 0.068 to yield 4.6790%.
Just massive moves across the board.
Exactly. So Wednesday, July 29, 2026, this is our end-of-day recap. We're doing a fast, wide-ranging deep dive into the macro forces, the central bank paralysis we saw today, and, well, the absolute tech sector panic that caused the Dow to lose almost 1,000 points.
Yeah, because it's all connected. You look at today, and it wasn't just corporate earnings doing this.
Right.
It was this intense uncertainty that was triggered right at 2:00 p.m. Eastern by the Federal Reserve's policy decision.
I mean, they held the benchmark rate steady, right, in that 3.50% to 3.75% range.
They did, but it was the way they did it. It was a 9-3 vote.
Wow, 9-3.
Yeah, that is a highly fractured FOMC. You had 3 dissenters, Beth M. Hammack, Neil Kashkari, and Lori K. Logan.
And they wanted a hike.
Exactly. They hawkishly preferred an immediate quarter-point hike, and the market reaction to that split was just, totally mixed.
Well, let's break that down, because the short end of the yield curve actually rallied on this no-hike relief.
Right, because traders who were betting on a hike had to, suddenly unwind their short positions on those short-term bonds, so they buy them back, price goes up, yield goes down.
Makes sense. But then the long end, like the 10-year Treasury we mentioned, that actually sold off.
Yeah, because the long end is looking at that 9-3 vote and thinking, inflation fears are lingering. They're thinking the Fed is maybe falling behind the curve.
And while all this is happening, the U.S. dollar index, the DXY, fell 0.49% to 100.956.
Which is fascinating when you look at the global context.
Yeah.
Because global monetary policy is totally fracturing right now.
Yeah, I was reading about that. The ECB, the European Central Bank, they actually hiked rates back in June, right?
They had to. Their inflation jumped from 1.9% to 3.2%. But then you look at the Bank of England, the Swiss National Bank, the Reserve Bank of India, which held at 5.25%. They are all just staying neutral.
It's like everyone is playing a completely different game.
Exactly.
But I want to push back on the Fed's strategy here for a second, because looking at their toolkit, it feels like they're trying to fix a plumbing leak with an electrical fuse.
That is a great way to put it.
Right. I mean, Fed Chair Kevin Warsh is literally known as a supply-side economist. So if this inflation is being driven by global supply shocks, which the commentary says is, does raising rates to destroy consumer demand in the U.S. actually fix the root problem?
Well, no. And that's the dilemma. Warsh knows this. But the analyst commentary we're looking at says he basically has air cover to wait right now.
Air cover from who?
From these internal task force reports coming in September and December. By holding steady today, he's buying time to see what those reports say about the supply chains.
But the Fed is caught between a rock and a hard place, because the global economy is slowing down. Growth is projected at, 2.5% for 2026?
Yeah, according to the Dun & Bradstreet outlook.
Right. So you have a slowing economy, but prices are still sticky. And the exact reason the Fed is so paralyzed by this supply-side inflation became glaringly obvious in the commodity markets today.
Oh, absolutely. The energy prices just violently spiked.
It was crazy. Crude oil just surged.
Oh.
WTI jumped 6.92% to $84.74 a barrel. And Brent crude soared 7.75% to cross the $90 threshold. It settled at $90.60.
I mean, an 8% move in crude is just massive, and the catalyst was entirely geopolitical.
Yeah, this flare-up in Middle East tensions, there were fresh strikes between the U.S. and Iran today.
Right.
And just to be perfectly clear, for you listening, we do not take political sides on this show. We're strictly looking at market mechanics.
Okay.
We have to report that Donald Trump issued a warning today stating that Iran will get a beating.
And algorithm models don't care about politics, they care about risk probability. That rhetoric immediately stoked market fears of a prolonged conflict, and those models priced in the risk of supply disruption instantly.
But here's my question. If oil is surging purely on sudden geopolitical military strikes, does the market actually believe the Fed's interest rate lever can do anything to stop a 2026 oil price shock?
Not at all, and that's why the Dow dropped 1,000 points. The market realized the Fed is powerless against this specific type of inflation.
Right, because you can't print oil.
Exactly. And going back to that Dun& Bradstreet economic outlook just weeks ago, they noted that U.S.-Iran negotiations had reduced the risk of a prolonged energy shock.
Oh, wow. So the market had actually priced in optimism.
Yeah, and today's events completely reversed that. It risks this brutal pass-through effect.
Meaning higher fuel costs hitting companies.
Right. It hits their working capital, it squeezes profit margins globally. If a company has to pay 8% more to ship their goods, they either eat the costs, which hurts their stock, or they raise prices, which causes more inflation.
Lose-lose.
Exactly.
And we saw that exact fear totally crush high-growth valuations today. I mean, the combination of geopolitical fear and interest rate uncertainty just wiped out the tech
I
sector.
mean, it was a bloodbath, especially overseas.
Yeah, starting in Asia. South Korea's KOSPI index plummeted 5.98% to 5,663.24. They triggered circuit breakers for the second consecutive day.
That is just wild.
The index is down a staggering 40% from its June record high. Japan's Nikkei 225 also fell 1.49%.
And the specific companies pulling it down are the heavyweights. SK Hynix fell nearly 10%, hitting a record low under $130.
Wow.
Samsung dropped over 5%, Kioxia slid 14%, and SoftBank fell 7%.
And it didn't stop there. That contagion hit the U.S. right at the open. Micron, Applied Materials, and SanDisk sank between 4% and 8%. Even NVIDIA took a 3.83% hit.
Yeah, nowhere was safe in semis.
But I've got to ask, looking at the KOSPI dropping 40% in a month, I mean, that behaves more like a highly concentrated, leveraged tech ETF than a broad national economy.
It really does. It's incredibly semiconductor heavy.
Right, so why are these specific companies being punished so severely right now? Everything we read says AI memory demand is robust, so why the sell-off?
Because there's this growing narrative in the market right now that AI capital expenditure is being overdone.
Overdone. But didn't Micron just have record-breaking Q3 results?
They did, but investors are rushing to take profits anyway. They are aggressively questioning whether the massive valuations attached to these chip makers are actually justified by the end-user returns on AI software.
Oh, I see. So it's not about what they sold yesterday. It's about whether their customers will keep buying tomorrow.
Precisely. If the software companies aren't making enough money from AI, they'll stop buying the chips.
Speaking of the fear of AI capital expenditure being overdone, the market closed today with all eyes on the earnings reports of the two biggest AI spenders in the world.
Microsoft and Meta.
Yep. Let's look at Microsoft first. Ticker MSFT. Closed regular trading down 0.63% at $390.86. But their Q4 numbers were massive.
Huge quarter for them.
Revenue hit $90 billion. That's up 18%. Net income reached $35.8 billion. Azure revenue surpassed $100 billion for the first time.
That's a huge milestone for cloud computing.
Totally. And their earnings were boosted by a $3.2 billion gain from their Anthropic investment. But here's the crazy number. Copilot reached over 30 million paid seats.
See that right there? That is immediate monetization. Microsoft is proving real business utility. 30 million paid seats means they are turning their AI investments into actual recurring revenue today.
Right, which completely contrasts with Meta.
Oh, completely.
I mean, Meta's Q2 revenue was strong, sure.
Yeah.
$60.8 billion, up 28%, driven by a 3% increase in daily active people to 3.6 billion.
Right. Their core business is doing great.
Yeah, and a 12% rise in average ad prices.
Yeah.
The ad business is an absolute cash machine, but their net income fell 14% to $15.85 billion.
Because of the costs.
Exactly. Dragged down by $42 billion in costs.
Yeah.
That includes a $2.4 billion legal charge and $1.18 billion in severance.
And that's not even the scariest part for investors.
No, it's not. They narrowed their 2026 capital expenditure outlook to a staggering $130 billion to $145 billion.
It's just an astronomical amount of money.
So wait, Meta's ad business is printing cash, yet their income is down. Are investors just punishing them for taking all that ad money and spending it on AI data centers and legal settlements?
Basically, yeah. Microsoft has a clear cost-to-outcome curve, which Satya Nadella actually mentioned. They turn expensive compute tokens into business results right now. Meta is asking investors to trust a very expensive long-term infrastructure build while facing massive regulatory headwinds.
It's a lot harder to trust the long-term vision when the Dow is dropping 1,000 points.
Exactly.
Well, beyond the mega caps, a few single-stock technical stories stood out in the wreckage today. Visa actually rebounded and gained 1% on revenue growth.
Which is a rare bright spot today, for sure.
Yeah. And then ON Semiconductor, ticker ONN, they extended a bearish pullback, dropping to test its 200-day EMA exponential moving average at $81.30.
And the downward momentum is still intact there.
Yeah. Analysts are warning of a potential drop to the $72 to $75 support zone if it breaks lower.
That 200 EMA is a critical line to watch.
But, I mean, let me challenge you on that.
Yeah.
Comparing technical support levels in this kind of macro environment feels a bit like, I don't know, installing screen doors in a hurricane.
That's fair.
Do moving averages like the 200 EMA even matter when the Dow is dropping 1,000 points on Fed and Middle East news?
Well, think of it this way. The macro forces dictate the weather, right? They're the hurricane. But technicals dictate where the capital actually flows.
How so?
When institutional algorithms decide to de-risk because of oil spikes, they look at technical levels to execute those trades. And Visa's game is a fascinating technical and fundamental signal.
Right, because it shows consumers are still swiping.
Exactly. It shows consumer spending resilience is holding up, even while high-flying semiconductor stocks face severe multiple compression. Capital flowed out of semis and into Visa.
Fascinating. Well, pivoting to tomorrow's calendar, the market will be heavily digesting these after-hours earnings calls from Microsoft and Meta.
Every word will be scrutinized.
Yeah, and they'll be keeping a close eye on any upcoming inflation data that might validate the Fed's decision to hold today.
It's going to be a highly volatile session tomorrow.
No doubt. So make sure you hit that follow button so you get this fast-paced daily market coverage right in your feed.
And just one final thought to mull over for you listening. If a 30 million seat success for Microsoft's Copilot can't save the NASDAQ from a geopolitical oil spike, are we entering a new market era where old school commodities finally matter more than next generation AI?
Something to think about. We'll see you tomorrow.